Hello and welcome back to Bhavani JIB. Today we are talking about retail banking, specially made for Indian bank employees aiming to crack JIB. In our journey through Paper 4 Module D, we start with the 25th unit, Tax Planning. Here we will be learning about taxation, classification of tax structure, TDS, IT slab, financial and assessment year, the residential status, heads of income, and capital gains tax. Taxation is how the government collects money from us to build roads, hospitals, schools, and more. It is the method by which government collects money from citizens and businesses to fund public services. There are two main types: direct tax and indirect tax. It applies to both income and goods and services. We pay the GST, right? So that is also included and it's also applied to the income. Direct tax is paid directly by people, like income tax, wealth tax, whereas indirect tax is paid when we buy something, that is, tax on goods or services, GST, customs duty, so on. For example, when you earn 10 lakh rupees salary, you pay income tax. So that is direct tax. But when you buy a shirt and pay GST, that is the indirect tax. TDS, tax deducted at source. TDS means tax is cut at the source itself, even before the money reaches you. The common sections that come under the TDS are salary, which is section 192, interest, section 193, contractors, rent, professional fees. You can just by heart this part of it. Say, for example, you earn 50,000 salary, company deducts 2,000 as TDS and gives you 48,000. So, what is happening here? The salary is, the tax is cut from the salary even before it is given to you. So, that is called tax deducted at source. What are the income tax slabs? We are looking at the new tax regime according to the Union Budget of 25-26. Because what we have in the book is the older tax regime. So we will be looking at this. Um, 0 to 4 lakhs will have nil income, nil tax. 4 to 8 will have 5%, 8 to 12, 10, 12 to 16, 15. So you can just also by heart this part of it, the slabs for the new tax regime. So, what is a financial year and an assessment year? We keep listening to this when we are filing returns. Financial year is the year in which the income is earned. So, when did you earn the money? So, which year did you earn the money? And that is the financial year. The assessment year is year in which the income is taxed. That is, we first earn and then we are taxed, right? So, we first earn. For example, you have earned for the year 2023 and 24. The assessment year will be the one after that. So, year in which the income is taxed, that is 24 and 25 is the assessment year. So, that is about the financial year and assessment year. There's no confusion. Financial year is the year in which the income is earned by the person. And following that, the next year is when you will assess the tax. The residential status for tax. Resident, that is the, we have three types like in this residential status. One is resident, one is a non-resident, NR, and the resident but not ordinarily resident, that is RNOR. So for the resident, the global income, that is India plus abroad, will apply. Whereas for the NR or the RNOR, only the Indian income is applied. So, for example, an Indian living in Dubai and earning there is not taxed in India unless income is from Indian sources. So, if someone is living in another country and he is earning there, he is not taxed by India. Okay. So he pays that country's tax. So unless and until he gets some income from India, like he gets some rental income from one of his houses in India, then that will be taxed by India. So that is about the residential status of the residential status for tax. Next, we'll move to the heads of income. Here we are trying to understand the income received from salary. That is, income received from salary includes your job, your pensions, the leave encashments, gratuity. All these things comes under this. For example, you earn 50,000 per month from your bank job. It comes under this head, income from salary. Rental income, income from houses or buildings. You own a flat and rent it out for 15,000 per month. This is taxed under house property. Even if you have a second vacant house, it is assumed to be rented and taxed. So you have to keep this in your mind. Next is profit and gain from business or profession. Income earned from business like shop consultancy, freelancing, and professional services like doctors, lawyers, chartered accountants. So all these things comes under profit of gains of business. For example, you run a tuition center and earn 1.5 lakhs per month. This is business income. Next is the income from capital gains. We'll be going more in depth about capital gains, but for now, capital gains, income from capital gains means profit earned from selling a capital asset like shares, land or property, gold or mutual funds. So all these things comes under this. So you bought a plot for 5 lakhs and sold it for 8 lakhs. So the 3 lakhs is called the capital gain. So you have bought some site or a plot for 5 lakhs and you have sold it for 8 lakhs, means you have earned a profit of 3 lakhs. So that profit of 3 lakhs is considered the capital gain. Next is income from other sources. Any income that doesn't fit into the above four heads, if it doesn't fit into all these four heads, it comes under this income from other sources. This includes bank interest, dividends, lottery winnings, gifts above 50,000. So all these things comes under income from other sources. Example, you earn rupees 10,000 interest from a fixed deposit. This is taxed under this head. This is about heads of income. Before we go to the capital gains, we have something called the previous year's exceptions. That is, normally income is taxed next year, but in some cases, it is taxed in the same year. If a person leaves India permanently, if a business closes down, or if an association exists temporarily. So, for example, if a foreign actor earns 1 crore for a film and leaves India, tax is collected right away and not in the next year. Usually, what happens, like I said, financial year, assessment year, you're earning the amount in like you're earning the amount in this year, you will be the assessment will be done in the next year, right? But here in some cases, tax will be collected right away in the same financial year. Okay, so this is about the exceptions. And we have something called some common tax terms are there, which are clearly given in the book. But I'll just tell you one main thing. We usually refer to a term called assessee in tax. So assessee means anyone who pays the tax. So assessee is the one who pays the tax. So we are all the assessees who pay tax to the government. So that is about it. And PAN means permanent account number. This everyone knows. TAN is usually applied to companies. So this is about some of the terms. So, what is capital gains tax? See, capital gains tax is a tax you pay on the profit made when you sell a capital asset. Capital asset means land or building, shares or mutual funds, gold or jewelry. So, all these things comes under the capital asset. So, you need to remember these things. And Here we are mainly looking at two things, right? One is the LTGC and the other one is the STGC. So what is LTGC? LTGC is long term capital gain. So if you hold the asset for more than a certain period, for example, you are selling land after 2 years. So that means that comes under the long-term capital gain. But whereas a short-term capital gain is when if you sell the asset within a short period, that is you're selling the shares within 1 year, or your the listed securities what they say. So less than a year if you're trying to sell it, then that is STGC. And when it comes to assets, if it is held for less then 24 months is when it is called as the STGC, that is the short term capital gain. So that's about capital gains. See, understanding tax isn't just for exams, it is for life. So if you earn, you must know how taxes work. So that is about capital gains. So far we have learnt about the taxation, the classification of tax structure, TDS, IT slabs, financial or assessment years, residential status, heads of income and capital gains tax. Don't forget to subscribe for more insights into the world of banking. Stay tuned, stay informed, and keep banking the Bhavani JAIIB way. Thank you. And next up, we will be learning the last unit in this module, that is the other financial services by banks. So until next time, happy banking.